Hi, I'm bringing you a follow-up to what I presented a week ago about Kiplinger, what they're offering for some best investments for 2020 and the next decade. Today I'm talking about some best investments that they're talking about for looking at 2020 because they have some more great information here. And so if you're trying to figure out what to invest in for 2020, pay attention, listen in, because this may be a stock you want to invest in. And the best thing is these are all dividend paying stocks. Stay tuned, I'll be right back. Okay, the person who's written this article, he himself is an advisor. These are stocks he recommends that his clients or they currently do own. He's not concerned about the clients that own them, but of course, anything in this information, you've got to do your own research and figure out what's best for you. This information is from James K. Glassman. He chairs the Glassman Advisory, a public affairs consulting firm. He's not right about his own clients and the stocks named in this column. He owns New York Times, NYT. His most recent book is Safety Net, a strategy for de-risking your investments in a time of turbulence. And if you haven't looked around, stocks are crazy. They're almost reaching new highs. I mean, it's crazy. I mean, who wants to jump in when the market's high? You know, who wants to jump in when the market's high? I mean, yes, some people still do it, but I advise you a lot of caution when you do that, because when you're buying at the height, I mean, it's easily the stock could crash or drop down a lot and you'll be losing some money. Yes, stocks are going higher and higher, but you also want to just think, you want to do some thinking, you know, would you want to buy high and sell low? No, you want to buy low and sell high, all right? So do your own diligence, do your own research on anything I'm giving out here, and your own, of course, do your own research as well, especially when listen to other YouTubers talking about the stock they've invested in, but some of them may be invested for quite some time. So be careful what you're doing when you're doing these, when you're investing in this market. But before I keep blabbing on, let me get started and get right to the first stock. And now from Mr. Glassman himself. My annual stock choices beat Standard & Poor's 500 stock index for the fourth year in a row in 2019, and the margin was pretty spectacular if I do say so myself. For the 12 months ending October 31st, 2019, my stocks returned on average 30% compared with 14.3% for the S&P 500. That's pretty good, you know. But as I reminded readers last year, don't get too excited about my forecasting ability. No one beats the market consistently. So just what he's done this past year, it may be good advice to listen in for this whole video and catch all the stocks that I'm going to mention. Since 1993, I've drawn 9 selections for the year ahead of my experts and added a choice of my own. The big winner for 2019, returning 112.1%, was Coupa Software, symbol COUP, which connects businesses with suppliers. It was a choice of Terry Tillman, an analyst with Golden Touch at SunTrust Robinson Humphrey. His picks on my list have beaten the S&P for 8 years in a row. Among his recent recommendations, I like OKTA, whose software verifies and manages and identifies people seeking online access to company websites, a valuable defense against hacking. Oka went public in 2017 and now has a market value of $13 billion. The company still hasn't returned a profit, but revenues are still soaring. All right, there's some other information, but I'm going to cut right to what you really want to find out about these stocks. So let's get started. Okay, the first pick, but these are all from December 24th when the market closed. So what you may find real time will not be the same prices on some of this I talk about. So of course, you know, always do your own due diligence and research. So the first one is NVIDIA, NVDIA. Another successful regular on the list of Jerome Dotson, founder of Parnex Endeavor, my favorite fund in the social responsibility investing category. The Dotson pick for 2019 was Starbucks. Another investing regular on the list is Jerome Dotson, founder of Parnex Endeavor. A year ago, Dotson took advantage of a big price drop and began acquiring shares of NVIDIA, NVIDIA, a giant maker of processors for applications that include PC gaming and artificial intelligence. In fact, NVIDIA may be the best AI play. The stock has bounced more than 50% off its June low, but it still offers excellent value. Currently, the stock pays a dividend of 0.27%. So it's not a lot, not a big dividend, but I've heard this stock for quite a while, and other people have mentioned on YouTube, but I didn't take advantage. I didn't jump on it because a few months ago the stock was trending very low. It was doing very well. As you can see, what I pointed out here, the stock could be another good play for the 2020 year. Currently sits at $238.62. NVIDIA Corporation operates as a visual computing company worldwide. It operates in two segments, GPU and Tegra processor. The GPU segment offers processors which include GeForce for PC gaming and mainstream PCs, GeForce Now for cloud-based gaming streaming services, Quadro for design professionals working in computer-aided design, video editing, special effects, and other creative applications. Tesla for artificial intelligence, utilizing deep learning, accelerated computing, and general purpose computing. Grid, which provides power for NVIDIA graphics through the cloud and data centers. DGX for AI scientists, researchers, and developers, and cryptocurrency-specific graphic processing units. The Tegra processor segment provides processors that are primarily designed to enable branded platforms, Drive and Shield, Drive AGX automotive computers, and software stocks, which offer self-driving capabilities. All right, there's more information, but I'm not going to go into that because I don't understand a lot of that. But I try to look at the numbers, I'll get the price of where the stock is, if it's high, low, and what it pays for dividends, and so on. But just giving you a quick little grasp, But you've got to do your research as always. So I'll move on to the next stock. Okay, for the year ahead, he likes the Chemours Company, a chemical manufacturer that DuPont spun off in 2015. Major products include titanium dioxides, which give brightness and hardness to porcelain enamels, and Opteon, a refrigerant with environmental advantages over Freon. Chemours soared in price the first few years after the spin-off, then ran into operating problems that Abraham believes are temporary. Chemours, he says, is a well-run, shareholder-friendly business, and the stock can unreasonably depressed after a sharp sell-off. It is certainly cheap. The PE is just $5. Currently, the stock trades at $18.40 and pays a dividend of 5.56. That sounds pretty good. The Chemours Company provides performance chemicals in North America, the Asia Pacific, Europe, the Middle East, Africa, and Latin America. So this is a worldwide company. It touches everything. It touches every little part of the country, of the world. Excuse me. It operates through three segments: fluoro products, chemical solutions, and titanium technologies. The fluoro products segment offers fluorochemicals including refrigerants, industrial coolers, air conditionings, foam blowing agents, propellants, and fire suppressant products under the Freon and Opteon brand names, and fluoropolymers such as industrial resins, specialty products, and coatings under the Teflon, Viton, Kytox, and Nation brands. A little tongue twister in some of these. The chemical solution segment provides industrial and specialty chemicals for gold production, oil and gas, water treatment, electronics, and automotive industries. The product lines comprise sodium cyanide, hydrogen cyanide, and potassium cyanide, and methylenes, glycosin acid, aniline, The titanium technology segment manufactures and sells titanium dioxide pigments under the Ti-Pure and Valmax brands for applications, and agriculture and industrial coatings, flexible and rigid plastic packaging, polymer window profiles, laminate papers used for furniture and building materials, and coated papers and paper boards used for packaging. The Chemours Company was founded in 2014. A lot of information, but a lot of this information you can look on Yahoo Finance and look for yourself as well to find out more on what they do. Okay, the next stock is Linde, Linde. Linde, a major supplier of industrial gases including nitrogen and oxygen, is a recent acquisition and the fund's seventh largest portfolio holding. The company was formed in 2018 through a merger from the German firm Linde AG and the U.S. giant Praxair. Since then, it has performed exceptionally with more to come. Linde is currently sitting at $211.62. Linde pays a 1.65% dividend yield. And a little bit more in the history of the company. Linde plc operates as an industrial gas company in the primarily North and South American, Europe, the Middle East, Africa, and Asia Pacific. The company offers oxygen, nitrogen, argon, rare gases, carbon monoxide, carbon dioxide, helium, hydrogen, electronic gases, specialty gases, and acetylene. It also designs and constructs turnkey processing plants such as olefin, natural gas, air separation of hydrogen, and synthesis gas plants. In addition, the company supplies wear-resistant and high-temperature corrosion-resistant metallic and ceramic coatings and powders for aircraft, energy, printing, primary metals, petrochemical, textile, and other industries, and manufactures a line of electronic arc, plasma and wire spray, and high-velocity oxy-fuel equipment. It serves healthcare, petroleum refining, manufacturing, food, beverage, carbonation, fiber optics, steelmaking, aerospace, chemicals, and water treatment industries. Linde plc has a collaboration agreement with ExxonMobil to develop open process automation systems. Linde was founded in 1879 and is based in Guildford, the United Kingdom. So this sounds like another pretty good stock to check out and do some more research on. It's another global company that touches a lot of different areas. So if a recession is coming in the near future, this company may still be able to hold on and still keep doing well, performing well, because it's not just in one location. Okay, now we're going to talk about the next stock. For 2020, he looked at Value Line's 20 stock model portfolio for aggressive investors and found a single stock with a top ranking for both timeliness and safety. That stock is Medtronic, which makes cardiac pacemakers and other medical devices. Medtronic's earnings have increased year over year for more than a decade, in which he calls a beautiful line. This stock is as solid as it gets. The ticker symbol is MDT. Okay. MDT is sitting at $113.77 and pays a dividend of 1.9%. Medtronic plc develops, manufactures, distributes, and sells device-based medical therapies to hospitals, physicians, clinicians, and patients worldwide. Another global stock, touching a lot of different areas. It operates in 4 segments: cardiac and vascular group, minimally invasive therapies group, restorative therapies group, and diabetes group. The cardiac and vascular group segment offers implantable cardiac pacemakers, cardioverter defibrillators, and cardiac resynchronization therapy devices. Another tongue twister. AF ablation products, insertable cardiac monitor systems, mechanical circulatory support, TYRX products, and remote monitoring and patient-centered software. It also provides aortic valves, pulmonary coronary innervation stents, surgical valve replacements, and repair products. This is a tongue twister for me, so I'm not going to go into more detail, but you can find out more. Check out Yahoo Finance, check it out yourself, because it's a lot of medical terms. Yes, medical is a huge industry. It's not going anywhere. Everybody needs to see a doctor at one point or another in their life. So it sounds like a really good stock pick right here. Okay, now we're on to the final stock. This one is actually recommended by Warren Buffett, owned by Warren Buffett. So pay attention, listen in. Let's find out what this next stock is. The author's usual Operation Miranda is to let the previous year's winners be this year's pickers. For 2020, he's given Warren Buffett, chairman of Berkshire Hathaway, a second chance. His choice for 2019 was U.S. Bancorp, which returned a mediocre 12%. Buffett has been adding to his holdings of USB and now owns 8% of America's 5th largest bank, more than any other shareholders. So this author is putting down here as a 2020 pick as well. Earnings have been rising consistently for the broadly diversified bank, and the stock is yielding nearly 3%, or roughly twice the yield of a 5-year Treasury note. Okay, USB closed the other day at $59.67, and as already mentioned, pays a dividend of 2.82%. U.S. Bancorp Financial Services Holding Company provides various financial services in the United States. It operates in 5 segments: corporate and commercial banking, consumer and business banking, wealth management and investment services, payment services, and treasury and corporate support. The company offers depository services including checking, savings, and time certificates, contracts, and lending services such as traditional credit card products, as well as credit card services, lease financing, and import-export trade, asset-backed lending, agricultural finance, and other products. It also provides ancillary services comprising capital markets, treasury management, and receivable lockbox collection services to corporate customers, a range of asset management, fiduciary, and services for individuals, states, foundations, business corporations, and charitable organizations. In addition, the company offers investment and insurance products to its customers, principally within its markets, as well as fund administration services to a range of mutual and other funds. Further, it provides corporate and purchasing card and corporate trust services and merchant processing services, as well as cash and investment management, ATMs, mortgage banking, and brokerage and leasing services. The company offers its products and services to operating a network of 3,018 bank offices, primarily in the Midwest and West region of the United States, as well as through online services and other mobile devices. It has a network of 4,681 ATMs. The company was founded in 1863, headquartered in Minneapolis, Minnesota. So there you have it, another great list of 5 stocks, passive income stocks, that you need to work on if you want to add them to your portfolio in 2020. I mean, the year's coming down to an end, very quickly, very rapidly. So if you haven't checked out my other videos, checked out my previous videos here, figure out what your goals are for 2020. I'm wishing you the best in 2020, and I encourage you to increase your goal of passive income investments. All right. Take care. Have a great day. And join me again this upcoming Sunday for another video. All right. Take care. Have a great week.